Hey there, this is Stuart for another Beachside Broadcast. This is my favorite little alleyway. And today's theme is macro matters. And I'm going to try and show you how one thing a million miles away in the world, Japan, can affect real estate here in southern Spain. So let me try and link it all together and tell you the story. The most important thing for you to know right now is Japanese government treasuries bond yields for 30-year term have gone up to 3%. That is the first time in 25 years. Okay, so that's point number one. Point number two is the Japanese are big buyers of US government treasuries, US government debt, so to speak. Okay, that's point number two. Now, what's happening is because of the aging population of Japan and because of a very low birth rate, which actually is apparent across the whole world right now, is the Japanese central banks have to increase their bond yields to entice more buyers. Okay? They need to sell their bonds to generate liquidity to support the Japanese market. What that means is if you're a Japanese company or you're a Asian investor, a big investor, with the yields going up, you actually want to buy more Japanese bonds. So therefore, there's a lot of Japanese companies that are repatriating funds. And where do they repatriate those funds from? Well, to avoid FX risk, they would probably sell some of their US treasuries to buy Japanese treasuries. Simple as that. And the Japanese have historically been huge buyers of US treasuries. What's happening in the US is now the US long-term bonds have to increase their interest rates to entice more buyers. Unfortunately, for your average American, this means things like mortgage rates, because that's based on the 10-year bond yield. Things like your health insurance, car payments, that's going up. So here we are in southern Spain. What does that mean for us? Well, last quarter, the US market bought more properties than they did the previous quarter by 57%, a massive spike. And I think we'll have even more US buyers because the US, particularly if you're coming from California or the East Coast, is becoming so unaffordable. And Spain is still quite attractive because of a low cost of living, the sunshine as you see here. And also we have immigration programs like the non-lucrative visa, the Beckham law, digital nomad visa. So if you're on some of these Facebook groups like Americans retiring to Spain, every week they post something like 1,000 new members in this Facebook group. The Americans are trying to get out of America, and I believe that will have quite a strong impact in the market here on the Costa del Sol. Let's not forget, if you're from California, to buy a sea view villa like we have up in Bahia de las Rocas, 4 bedrooms for 1.06 million, that's actually peanuts for a Californian. So they will come and drive market prices. Now, the bigger picture is very simple. People are scared. I mean, the Japanese Prime Minister announced that Japan's economy is as bad as Greece's was, okay? They have a debt to GDP of 250%. And when the global markets are fearful, what does the smart money do? They buy gold, they buy hard assets like real estate. So I think at the end of this year, we'll probably see a massive amount of people coming to buy properties in southern Spain. I really do, but let's see. Because there's pent-up demand, and the ECB have dropped rates in Europe, which is really good, making things a bit more affordable here. So again, if you're an American and your interest rates there are 7% and you can borrow at 3.5%, basically half the price, it makes sense to use leverage here in Europe and buy a beautiful property here. So the big picture is everything is interconnected. Southern Spain is impacted by global markets. We talk about supply and demand a lot, but basically it comes down to liquidity. More liquidity, prices go up for hard assets. So if you have a chance to make a move on something, it's actually quite an interesting time to do so because interest rates are low and you just want to beat the crowds, I guess. But hey, who am I? I'm just a real estate agent that has a background in investment banking, maybe a different angle to others, and I follow this every day. And I just want to try and paint a picture of how the macroeconomic world connects to us here in southern Spain.